as an entrepreneur, there's going to be uncertainty. So if you need certainty, this is probably not the right business for you, but maybe you can overcome this need for certainty. And I think this is something that we as entrepreneurs have to deal with all the time. And even though the students coming in working with us don't have confidence, they are able to deal with this uncertainty somehow. And it's really fundamentally because we kind of give them three things. Honestly, we give them Hey, Jerry, welcome to the show today.
Thanks, Michael. I'm glad to be here.
Yeah, today we're going to talk about the 4 biggest mistakes to avoid as a new real estate investor getting in apartment buildings. And I brought you on, Jeremy, because you've been with us as a mentor, teaching other students how to get into their first real estate deal and become financially free for like, how long? Like 3, 4 years?
Going on 4 years now, yep.
Okay, that's crazy. So how many calls do you think you've had with students over that time?
Probably somewhere between 300 and 400 plus calls, yeah.
Yeah, so this is why I'm drawing on you. So thank you so much for helping out. Here's the other thing you got to know about Jeremy and some of our mentors that we have is these are full-time syndicators, and there's a lot of them out there. And, some of them successful, but, they're not really willing to share what's working. They're like, aha, I know something you don't know. And Jeremy was like, you know what? I'm going to share this with other people. And he's helped literally, well, dozens of students do their first deal. And it's really awesome to be here. And one of the things I want to talk about today, we're going to learn here on the show is, the 4 top mistakes that new apartment investors make. And they're really around the basics, like finding deals, analyzing deals, raising capital, being taken seriously as a new syndicator, all the things that people make a mistake about. And so I want to get into that with you, Jeremy, and really kind of drill down on like what's like the first. So there's 4. Okay, so we have a method to our madness here. Jeremiah jammed on us a little bit. We're like, what are the 4 basic mistakes that new investors make? And having said all that, our students don't make those mistakes because, well, they're working with us. However, we have in the process of working with students, we've seen people, well, not work with us and not follow our process. And so we want to kind of talk about the things that investors make that maybe aren't working with an experienced syndicator like Jeremy, for example, and some of the mistakes they make. So what do you think is like the first mistake that you see new investors make?
For me, some of the most common mistakes, when I see folks starting is really diving in and getting a fundamental knowledge across the spectrum. In reality, with syndication, we're starting a business. And in order to do that, we have to really understand a wider breadth of things than what we probably are used to in the past. So whether it's finding the deals, whether it's raising capital, whether it's just understanding all the lingo and the language of all of the documents we're going to look at. And I mean, documents, coming from brokers and all the other aspects, and then being able to analyze deals. If you're not, before you weren't used to spreadsheets very much, and now you're going to start looking at some pretty powerful stuff.
Yeah, so you mentioned a lot of things that kind of go into deal making, deal analysis, and deal flow, and things of that nature. What would you say is kind of like one of the first mistakes that people make?
To me, it's not getting going fast enough and realizing you need to learn this stuff, and you need to stay on pace with the learning process. And you can start to slow down and not necessarily want to keep going with the process.
Yeah. So one of the things that, and I agree with you, not getting going early enough is not really what I call being deal ready. Being deal ready is one of those things where they're not even prepared to talk to brokers and investors. Like, talk about what kind of we show our, the mistakes people make not being deal ready, and at the same time, kind of what we teach our students to become a more deal ready.
Yeah, being deal ready, it is kind of that language, being able to understand the process of handling a deal when it comes to you. Those are some of the foundational things that you have to have. It's an interesting process watching people pick up on the language and all of the dialect, the acronyms and that sort of thing. That are necessary to become truly deal ready.
Yeah, and the other thing that people mistake is that they don't really have sufficient knowledge about being deal ready. So when they talk to brokers, they're not using language. They're not using insider language like cap rate or value add or reposition. They're using, well, newbie language. And that doesn't go well when talking to brokers. And also, a lot of them, a lot of new students they don't have the track record, which is why they're new students. And so the way they're calling brokers, and the brokers ask them, hey, what's your track record? And they're like, well, I don't have any. And so the broker was like, you know what, I'll tell you what, Sam, why don't you send me your resume and a proof of funds, and I'll send you some deals. And of course, students are stuck with that. And what is the solution to this not being taken seriously by brokers?
Yeah, so in reality, you need to start to build a team, right? You got to cover all of those aspects of this new business, whether it's the property management folks, because you haven't managed properties, maybe you self-managed a couple small properties, but you're going to get much bigger when you start to deal with multifamily. You need to have a much broader reach with your team. You're going to need different brokers than anything you've done in any mortgage activity before. So I'd say brokers, but I really mean kind of from a lending side brokers. You may need to have different types of financing options depending on the properties you're looking at. So you really need to build out that team with lots of key people that will bring all of those knowledge bases to you at your disposal, depending on which ones you have to actually call up at any given time for a specific property.
Yeah, imagine calling a broker and you're using insider language because you got some education, and you're also now, instead of, hey, what have you done? What's your track record? Now you're saying, hey, you know what? I'm working with Frank. He manages 3,000 units, and I have lender XYZ who's underwritten $1 billion worth of deals, and I have an SEC attorney. Now the conversation shifts from your lack of track record to your team's track record. And what broker is going to try to doubt you and ask you for proof of funds when you have this major team built and they're not? Instead, what they're going to do, they're like, ooh, she's a player, right? How else could they have recruited such an amazing team? And they're going to take you seriously. And that's how we overcome this lack of experience with some education and building a team.
Yeah. And I think it's really key to understand that, when we bring students into the program, we bring them through all of those facets, all kind of simultaneously inching forward in that knowledge base. And really they get to grow. And there is some really interesting things that happen. When you first talk, the acronyms and things are a little foreign, but after several months, it really becomes interesting because you'll be on a call and you can just tell that they've changed their conversation with you. And those acronyms are now just part of the conversation when we're talking through particular deals that we're reviewing.
It makes all the difference. It's a little change, and it's not, education doesn't take very long, and building your team doesn't take very long. And so people always think, I need to build up 5 or 10 years of real estate investing experience. Let me flip some houses or build rental properties to get the experience. And that's cool, but it's not necessary. Like we can get you there in probably 30, 60 days. We can kind of get you deal ready. And that's really a very important part of being released, like I say, into the wild, so you don't sound like a newbie. Now, the next challenge is really around is deal flow. What do you see some of the challenges happening around? Because you need deals and capital. A deal and capital, those are very important things. What are you seeing some mistakes being made around deal flow?
Being afraid to talk to the brokers and establishing some relationships, and even just getting signed up for the deals that just come through naturally if you just subscribe to the mailing list for the brokers that are in the market that you decide on. Though just making those fundamental steps will start to put you on a list and start a timeline. Then when you get down the road, one of two things will happen. When you call, a broker, a particular brokerage company that you've been registered with, they'll have you on record as being in their system for a certain period of time. So starting as quickly as possible kind of seasons you in their database. And then when you start calling them, and you're talking to them, they're going to recognize who you are as you have that conversation. And the longer that you're with them, I'll call it the relationship builds, and they really do feel a little bit of an obligation that you've been sticking it out with them for 6 months, 12 months, maybe a year and a half on any given broker, maybe 3 to 5 years. before you do a deal with them, but that relationship is building, and those are important steps for them to recognize you, and having some communication, quarterly at a minimum, if not monthly. And, when we're really getting going and we're looking in a market, actively pursuing deals, it could be weekly that we're having discussions as we're evaluating those deals and providing feedback.
Yeah, off-market deals. What percentage do you think off-market deals are happening versus on-market deals?
I think if you have if you're doing property in your own backyard, you're probably going to see significantly higher ratios of deals that are off market, truly off market. If you're dealing in other markets, it's a little bit harder to get those off market deals, but you certainly have to establish that relationship with the broker before they're going to, count you into the circle for off market deals before they send them to the masses.
Yeah, one of the mistakes that people make is coming from a real estate, single family house investing world, is they think they can find apartments on the MLS, or they hear about LoopNet, the magical source of all deals, where the truth is that it's kind of where deals go to die. And what Jeremy is talking about here is that he kind of glossed over this common mistake, which is those things. And the solution is to build a relationship with brokers. So, I grew up in the house flipping world, and, it was all about sending postcards, putting up bandit signs, MLS, building relationship with wholesalers and brokers. And none of those things transferred to apartment investing. It staggered me. Like, man, all this stuff I've learned over 3 to 4 years didn't transfer at all to apartment. It's like a totally different game. And so, if you're getting an apartment investor, the magic, as what Jeremy's describing, is it really happens with building relationship with brokers. That's the key.
Yeah, and if you want to build, if you want to do off-market deals and it's in your backyard, you really do have to build the very same relationship with the owners, but that's much more cumbersome because brokers have access to many, many, many sellers, or potential sellers down the road. So you can use one conduit to get to them versus having to go establish all those relationships with all those sellers.
Yeah, it's way too tedious. And so I did try this for a time. I sent yellow letters to apartment owners in Texas. I think this was back in, 2006, I think it was. And what I found is a lot of them are LLCs. There's multiple owners, there's gatekeepers, and it never gets to them. And by the way, even if it did get to them, they're not going to sell it for all cash, fast close. Okay, they're not. What are they going to do? They're going to call their broker,
That's very true. I get those very same calls and I get those very same letters.
Yeah. Do you ever call them? Like, no, you can call your brokers because these are all tire kickers. So it's funny. It's like you learn all this stuff in a single family house space, and it doesn't transfer very neatly to the apartment investing space, which is kind of odd. The other thing, another mistake I see people make, this is back to deal flow, Jeremy, is they pick a market that's too small, right? So, if it's a numbers game. So if you want to analyze 3, 4, 5 deals a week, and you pick a market that's too small, you're not going to get those number of deals just by matter of practicality.
Yeah, that's absolutely true. And some markets may, literally see one property sell every 3 to 6 months, especially if it's in a market that has a lot of long-term hold. You need to be kind of conscious of that. If it's held by, and I'll call it long-term investors, and they just hold it for 10 to 20 years, that's different than a much larger market where there's a lot of, whether it's syndicators or other investors that are doing value add, and those properties transact much more frequently.
Yeah, exactly. So just pick a market that's big enough to sustain your deal flow. And if you happen to be in a smaller market, like for example, we love Huntsville, a great market, but man, we'll be lucky if we do a deal a year. So we can't build a business around that. If you need to analyze 3, 4, 5 deals a week, which you should, then pick a large enough market, or you can pick 2 smaller markets. That'll work as well. So these are some of the mistakes that we see. Deal flow is critical. As you know, it's a numbers game. Anyone come from the single family house investing space, it's a numbers game. Got to make offers, make offers, make offers. I'll get on the phone, get on the phone. And to some degree, I like to say it's the same thing, but different in the multifamily space. So deal flow, establishing deal flow is obviously a critical pillar of getting a deal done, obviously. But there's another one related to, and that is deal analysis. Now, deal analysis is a problem for single family house investing as well, because, for example, if you're flipping houses, well, you surely need to know the ARV after pair value, because if you get that wrong, shoot, it's not gonna go well. You better get your construction costs right, otherwise it's not gonna go well for you. Now, even a rental property, that's cool. You need to know both of those things, and market rents. What are some of the mistakes you see people make on analyzing apartment deals?
I think one is knowing your strength, and in some cases, folks just they don't come from a world of spreadsheets and numbers, and you may have to find a partner or a teammate in order to address that. In other cases, it can be just figuring out and learning what the fundamental inputs are, right? If you haven't done this before, you don't know what your baseline is. You don't necessarily know what expenses from landscaping or things like that, or how to determine whether what the broker gives you in their information set is relevant and valid for what you're trying to input. Because it's a classic story problem when you get an offering memorandum, and there's a lot of information that you don't need. There's a lot of information you may not know whether it's true or not. And in some cases, you have to figure out, because that could be the value in the property. Maybe the owner really is spending that kind of money on those expenses, and in reality, they shouldn't be. Those are some hidden opportunities for those deals. But over time, and with kind of starting with a standard process of looking at the deals, you can figure that out and start to figure out how to make the right assessment to identify the deal that you're going to go after at the right price point based on those really key knowledge parts.
Yeah, some people sometimes tell me that, oh, it's too complicated to underwrite apartment building deals. But honestly, it's not any more complicated than single family houses. At the end of the day, you need a good financial model. In our world, we use a syndicated deal analyzer. That's the most widely used underwriting tool for, and its cool thing is you can do very simple analysis very quickly, but allows you to do very advanced analysis. And so you can solve that. You need a good financial model. A lot of people just think, oh, I don't have a financial model. Well, go get one, right? It's very affordable. You can get it. But then the other problem that you mentioned, Jeremy, is the numbers you put in the Excel spreadsheet, right? Because I can make my spreadsheet say anything I want. The key is, what numbers am I putting in? What am I basing that on? Right.
Yeah.
So people will go online and do some online research or rules of thumb, but they can make big mistakes if they go at that way. So how do we advise our students to go about it?
Yeah, this is, I'll call it, we have rules of thumb, but they're national kind of starting points. But in reality, we need to learn about our specific markets. There's different insurance rates in different areas of the country, and folks that may own a vacation rental property or something like that in Florida, have been devastated with the insurance increases. Well, those happen on multifamily properties too. So you need to understand what those critical expenses are by the area that your market is in. And when you start doing reviews of different properties in that market, you certainly get acclimated to those specific numbers that you need to know. In different asset classes will have different numbers. So the experience that you can gain, the experience you get to leverage with mentors, and the experience with other investors or syndicators, through the platform, will also provide you great places to get that key information for underwriting solidly.
Well, you're talking about the team we built in the deal ready step. You mentioned mentors and your team, right? You got to lean on someone who's more experienced than you are, number one, but also lean on your property manager, right? If you're doing rent projections or expenses, well, they know the local market. What about your lender, right? Lean on your lender about what kind of terms you can expect from your interest rate, and you put all that in the spreadsheet, right? And now you have numbers that are actually based in reality. And so by leveraging your team, some kind of experienced advisor, your property manager, your lender, now you're not just making assumptions. You're not going on the rentometer for the rents and you're not using just national rule of thumb. You're actually using local expertise from your team. And this is why building the team in step one is so important, because without it, you're just guessing. And as a result, people make a lot of big mistakes in the analysis. So it's one of those things where analysis is actually not nearly as hard as it is once you have a good financial model. Almost anybody can enter the numbers in. You just got to make sure that you put the right numbers in it and leverage your team. So that's a really good point.
Yeah, and I think it's really interesting because for myself, in a given market, I have an SDA that is, I'll call it, standardized with those numbers for my market.
For
And
a
I
local
continue
market.
to leverage that.
Yeah, and you get it from deals you're looking at, you're getting from property managers over time. You really start learning and you adjust your rules of thumb. And sometimes you get a deal with incomplete financial information. You're like, well, What do I do now? Well, you reference all the 24 other deals you looked at and your property manager, and you're like, you know what? In this market, I'm running 54% of income is my expenses. And now you
Yeah.
can have a pretty solid rule of thumb as you kind of get back to the broker with a 10-minute offer.
And sometimes the property manager that you're working with, because the markets, there's a limited number of property managers in total. They may have either managed that property in the past or know some very specific details about that property, and they can provide insights that you don't have because you don't have that duration of time in the market that they do.
Yeah, you got to leverage your team. So we talked about getting deal ready, building your team, getting your education, generating deal flow through brokers, learning how to analyze deals, leaning on your team for the assumption. The last pillar really is capital raising, right? It's the last thing we talked about. What are some of the things that you people make mistakes on raising capital, or maybe they have some limiting beliefs around raising capital? What's holding people back from raising capital?
Yeah, I think it's three primary things that I often see is the fear of
Mm,
raising capital, that they
yeah.
have a hard time having that conversation. And that you have to get over that again, or you have to develop a slightly different mix of a team for their strengths and weaknesses. So you have to make a decision on that relatively early because you need to declare to all the people that you possibly can. Sometimes there's some limitations with your occupation or whatnot, but generally, you need to declare that you're in this industry. This is where you're headed. And when you do that, you start that time clock of credibility that they now understand that, when an opportunity comes to invest in a multifamily deal, it's not new because you've been working at this for months and months potentially by the time you get that first deal under contract and actually raising capital for it.
Well, let's talk about that working on months for months, right? Because here's the chicken egg problem that a lot of new investors have. Okay. Um, I don't have a deal, therefore I can't raise money. Okay, that's a good point.
Yep.
Or I have a deal and now I have no time to raise money. So it's a chicken egg problem, and people kind of throw up their hands and go, see, it can't be done. How do we solve this problem in our world?
Yeah, so you either start with a package that you've written around another deal. You're starting to look at deals and offerings from brokers right away. When you start investing some time in evaluating one with an SDA and you have some intimate knowledge to that property, it's a great opportunity to create that sample deal package that you can now talk to even without looking at it. Because once you start doing the analysis on the property, the things just stick in your head. The details of the property are there. When you have those conversations, there's so much more fluid about the details that, back to credibility, those folks that you're asking to potentially invest now can see the detail and you're talking that lingo. It's just groundbreaking on stepping forward with raising capital.
Yeah, the secret to raising capital is raising capital before you need it, right? Dig the well before you need it. And so the sample deal package is exactly our solution to the problem. You get a deal off a broker and you basically put it in the SDA, the syndicated deal analyzer, and you create projections. You use the photos and the projections in the actual marketing package, and you put together a nice little package and you give it to your investors. Now, you tell your investors not a real deal, but the point is this: it's a conversation piece,
Yeah,
right? So now you can take a sample deal to the investor, and now you can have that first conversation long before you make an offer on a property.
exactly. And you start to learn the formatting, right? You get experience with building that deck. You can start getting feedback on things that the investors want to see. All of those are critical so that as you put together a much more formal, full offering that you're going to be doing down the road, you've got a template put together again for that.
Yeah, absolutely, absolutely. And so imagine you'd follow this process, right? And so you're doing this for 2 or 3 months, and you're starting to talk to investors. You're getting a little better at talking to people about raising capital, and then you have 5 people that want to invest $50,000 with you. Now you have verbally $250,000 behind you. Now, how much more confidence would you have in making an offer, say, on $1 million property, right? I mean, a lot more. Like if I didn't have that behind me, I'd be biting my nails the entire time. I mean, who needs that, right? So we teach our students to kind of start raising capital, right? Kind of right from day one. As soon as you know how to analyze deals and get deal flow, you can start raising capital, and it solves this problem. It takes the pressure off.
Yeah.
So those are really those are 4 pillars,
Yeah, I agree
or
that
four major
that's
mistakes that people make.
Yep, and you just got to get going right away on that part of it. It is a lot of times it's that confidence that you have to build over time, and it's a step change can be traumatic if you if you try to go all the way in one step. But taking it small pieces at a time and building those tools, having those conversations is definitely much easier.
Well, let's talk about building that confidence, right? Because I mean, very few people come into this business working with us with a high degree of confidence. Because first of all, no one's bought a multi-million-dollar building. Very few people have raised capital. Well, none. So they come in here without confidence at all. And
Yep.
so, how do your students then slowly build this confidence?
Yeah, I think, as I see the students progress through the program, they're learning the process. They're seeing other individuals doing it that are going through the same process, and it becomes easier to do that. And we're always here to help them from a mentoring standpoint. That's our goal. When they get into that situation where they're submitting LOIs and there's a fear of submitting that letter of intent, we can help them through that it's practical, and what those questions are going to be that come out of that as we get through purchase sale agreements. If there's some developments that happen, we can help guide them on potential options that they can explore and step forward to the next potential roadblock. And there's always going to be roadblocks. Every real estate deal is different. You're going to have something that happens all the way through that closing process. And then even after that, you still have operations, and we continue to typically help people with those situations too, as we're going through P&L statements and trying to figure out how to execute some of the value add options that were put on the table as part of the deal. It's our goal to help through that process also.
Yeah, I think one thing that builds confidence is obviously knowledge, right? Knowledge, but that only goes so far. Really, you need to, there needs to be activity. You have to build momentum and practice maybe in a safe environment. And so in our case, what's helpful when people come in and work with us, we have the deal maker blueprint. It's kind of like the week by week task list that they have to do. Week 1, do this. Week 2, they don't even have time to, be afraid. They just have, because we give them homework right away. And so that kind of builds momentum as well. And so I think activity, taking a little bit of action every single day, really builds confidence. And the cool thing about it is it doesn't take 5 to 10 years. I mean, it literally takes 30, 60 days. And people go, huh, I know more about underwriting than my broker does at this point.
Yeah.
You know?
Yeah, the program is very similar to me of you can learn things over a long period of time just trying to do it out in industry in almost any field, but you can circumvent that timeline by actually targeting education to be able to learn it quicker in a much more practical flow. And when you do that, all the pieces come together faster and you make less mistakes, and get through that process to your goal a lot sooner.
Yeah, that's fine. This is great. I love all this, Jeremy. Thanks for kind of boiling it down for us. So if people want to get connect with Jeremy, Jeremy, how can people connect with you?
Sure. Jeremy at Lemere.com. So it's very simple, right on the screen there. If you grab that, that's kind of direct email. And we also operate under the Navigator Wealth Fund. So we have a webpage at navwf.com. So kind of abbreviated Navigator Wealth Fund, navwf.com.
That's awesome. Well, thanks for being on the show, Jeremy. Really enjoyed it. And so, so one of the things we talked about is you talked about a lot of things about, building your team, getting your education, taking action, building momentum. I think those are all keys. I think fundamentally, we talked about as a deal maker live, we talked a lot about dealing with uncertainty. And, as an entrepreneur, there's going to be uncertainty. So if you need certainty, this is probably not the right business for you. But maybe you can overcome this need for certainty. And I think this is something that we as entrepreneurs have to deal with all the time. And even though the students coming in working with us don't have confidence, they are able to deal with this uncertainty somehow. And it's really fundamentally because we kind of give them 3 things. Honestly, we give them like that system they can follow called the Dealmaker Blueprint, and then we give them really the right kind of support. We have a community, and we have mentors and advisors, that kind of stuff. And then we allow them to plug them into a network, to get access to capital and deals. And this makes all the difference. And so in our world, the average student Jeremy, I don't know if you knew this, but the average student, their average deal size is $4 million. That's amazing.
That's
And
awesome.
it's because of the system that we've built and also the ecosystem. So if you find a deal, we'll partner with you with someone who can raise that $1.5 million. And if you have access to capital, then we'll partner you with someone who does a deal. And now these two kind of do a deal together. So it's really cool. And if you're listening to this right now and you're like, man, I don't have all the answers clearly. It sounds really interesting to me what you talked about, the four mistakes people make, and I call them the four pillars of successful apartment investing. Then what I'd like to do is I'd like to invite you to a conversation. It's the michaelblank.com/clarity. And because the reason it's called clarity, because we call this a clarity session. So there's not going to be someone selling you on something or mind bending you or coercing you. What the purpose of the call is to explore what's important to you in your life. And if financial freedom is important to you in your life, and you might want to use real estate to achieve those goals, and this might be a good call for you. They're going to ask you a bunch of questions, and it's the idea is to get clarity on what you want. And you might not want financial freedom or anything. Like, you might not want to go through the trouble. Maybe you have a great job and it's great the way you are right now, but maybe it's not. And if that's the case, this will create clarity, and then maybe we can help you get there, and maybe we can't. So it's one of those things. So I encourage you all to go to the michaelblank.com/clarity right now and schedule a call with one of our advisors. It takes about 20, 30 minutes. And if it's not a right fit, then we'll simply part as friends. But Jeremy, you and I have been doing this for a long time, and we are just really confident about the results we can deliver for students. And what would you say is kind of the common thread of your successful students and then students who maybe are not successful? What would you think is that common thread?
Yeah, I think the most common thread is knowing that this is the path that they want to go, and they know why they want to get there. When they have that energy behind them,
Hmm.
we just need to provide them the tools to execute.
Yeah, that's amazing. And this is why this clarity session is so important. And we've honed in on this. I've always kind of thought this was kind of woo-woo stuff about your big why, but it's not. It's you really need to be clear about what you want in life. And so much so that, you should probably get clarity for yourself and also with your spouse and your family about what you want. Like, financial freedom will literally change your life. It certainly did for me and for you as well, and your entire family. So it's a conversation. Hey, do we really want financial freedom, or are we going to continue on the path we are in right now? So clarity is absolutely key with this. So that's a really good point. So check us out. Go to the michaelblank.com clarity. Do that right now. Just schedule it right now. We're going to do Q&A here in a second, live Q&A. But go ahead and schedule that call right now. It's obviously no obligation for anything. I think you'll really find it valuable. We do this at Dealmaker Live, and we always sell out on these clarity sessions because it creates so much clarity, frankly, one way or another. I mean, we'd love to have you work with us, but maybe the other way around. Like, yeah, you know what? This is not for me right now. Like, I'm not in a good place right now. It's not the right time for me. But if you're probably on this call because you read Rich Dad, Poor Dad, and he put this crazy idea of passive income and financial independence in your brain, and then he mentions a confusing world called real estate. And you're like, oh, real estate, that's great. And maybe you've even actually gone down the path of real estate, and you're like, my gosh, I can't seem to get there from here. Something is not right. I can't scale this. I can't make enough money. It's not passive enough. And this is the path. This is the only path. And I've done a lot of shenanigans in my life. And this is the only path. And not only is it the only path, it's the fastest path of any real estate strategy out there. And I'd like to think, Jeremy, we have the best program out there. In fact, if you work with us, we actually guarantee the results that you will actually do your first deal. And that's really cool. No one else does that. And the only reason we can do it is because we've done it so many times and we have a very reliable system. So we're going to take care of questions in a while, but while we're taking questions, go ahead and schedule that call. Again, there's no obligation, but it's really going to be very meaningful for you. And so let's take some questions here. Shay's asking, where do you find the investors? Isn't that a great tactical questions? Where do we find investors?
Yeah, I mean, there's a couple key starting points, right? You're going to have those conversations for your family, your friends. Those are obviously some of the folks that probably has the most trust with you. May or may not be the case. If not, then you're going to seek out through other modes. And there's a couple different ways we go through it with the program. It could be a direct outside. You just head out and you find high net worth individuals to invest in the properties. So you can put together your package, have conversations with high net worth individuals, and convey that team and that credibility and raise capital that way. There's obviously from there, you can kind of diverge in lots of different paths. You can insert yourself into other networks. All of those can be recommended. Some folks come with a natural ability to raise capital, and some folks have obviously a much more challenging time getting to those larger numbers for bigger deals.
Yeah, and here's the other thing about this. I find that here's the thing. This is a tactical question of how you find investors, because it's kind of a lot of people just don't know that they don't think they know anybody, right? And the thing is, raising capital is actually easier than people think at the outset, because you've never done it before, and you certainly don't want to beg friends and family. And so the cool thing about raising capital is that you start with your sphere of influence.
Mm-hmm.
And the way you do it is you just, you spread your enthusiasm about this cool thing. You're working with Jeremy, you're working with us, and you're just excited about it. And you simply ask for referrals all the time. Like, I'm cool doing this cool thing. I have this cool thing. It makes 15% average annual return, some cash on cash, tax advantages, appreciation, it's an inflation hedge. Man, I'm looking for stock market investors because I think we can do better than the stock market. Do you know anyone, right? And so it's actually just a very easy conversation like that. And people find that ones that are working with us, that actually raising capital is a lot easier than they thought. And it's only because, well, they've never done it before, and they don't know what the system looks like. And then again, there's this whole joint venture component, because the people are asking that questions are typically going to ones that maybe are hustling and finding a deal, but there are high net worth individuals who have access to capital. And you know what they don't want to do? They don't want to find deals. They don't want to underwrite deals. They don't want to talk to brokers. That's awful. What they want to do is they want to raise capital. And I think in our environment, I think we pulled at the America Live, Jeremy, like 50-50, right?
Yeah.
It's just uncanny, right? So you asking that question about raising money, the other question that the other party will ask is, how do I find a deal? You know what? So you guys are made for each other. That's what we do. Let's see. What else we got here? All right. Awesome. Yeah, go ahead and schedule that call. The michaelblank.com/clarity. You're not going to regret it. And John is asking, do you see minimum return projections changing with rates, and how does that affect your capital raise success? What do you think about that changing environment?
If you want to you want to spend an unlimited amount of money on the property, yes, your returns should go down.
Yeah.
But in reality, your investors are seeking a return. They have competitive alternatives. So you need to continue to hold that bar on the returns that your investors are going to need in order to trigger funding of your deals. So when you know what that is, what those levers are, and you place them into the SDA and you work around those key points, you'll come up with the price that's going to be necessary. Not every deal is going to work, but you have to find and underwrite to what you can get capital at, what you can operate a property at, and still deliver the results that are necessary to make those investors happy.
Well, it's true that we find the cash on cash return has gone down over the last 3 years. No question about it. If we're at 4 or 5% cash on cash return, it's a reasonably good deal. But of course, investing can put money in a money market. But you have an unfair competitive advantage that you have, and you'll learn all this stuff, and you can educate your investors around that. Okay, cash on cash return is about the same, so why lock up your money for 5 years when it's not liquid? Well, there's certain other advantages. For example, the average return on a multifamily, if it's underwritten well and you're working with an advisor, is 13 to 15% IRR. Well, first of all, you're not going to get that from a money market. And number two, you get incredible tax incentives. So on that 5% return on the money market, you're paying taxes. If you educate yourself, you have a good CPA working with you and your investors, you can kick the tax can down the road for a very long time. And so those are some things. Also, IRA investing is a magical way to get into these deals. A lot of people have IRA money. They may not have a bunch of liquid money or stocks and cash, but they have a lot of IRA money. And so there's trillions of dollars locked up in these IRAs. So it's a matter of educating your customers, because the average IRA investor is getting nothing, like hardly anything. And you give them access to a deal like this, making 15%, it's amazing. And so it's really just a matter of educating your investors about these alternative investments. I think it's really cool. It's not the only investment your investor should invest in, but but it's something that they need to diversify. And so our call to action is really diversify out of stocks into alternative investments in general. That's not even multifamily. It could be oil and gas. It could be precious metals. God forbid, Bitcoin, right? So something like that. And so there's a lot of investors who are looking for alternative investments, and you can help them with that. And Chris is asking, how much time per week or per day would it take to be a successful student? My W-2 does not allow much time. That's a great question, Chris. Greg, how would you respond to that?
To me, it's how tactical you can be with the time that you do have, right? You need to grow in certain ways. In some cases, you're better prepared in some of these pillars than others, and you need to focus more of that time specific to those growth pillars. In general, getting that deal flow coming in and having enough time to do the underwriting, those are kind of the key pieces. Things will get much busier, and there'll be a little bit different commitment in the process when you get to an actual deal and you have to start dealing with due diligence processes and things like that. But at that point, or even before, you really want to understand your limitations in that process, and you very well need to be part of a team. You'll continue to grow, you'll hit your goal. Being part of a team will help you facilitate those extra hours to do all those other activities, and you can still take part in it, especially if you can raise the capital at the pace that you would have worked alone. You can still be a significant piece of that deal, whoever you're working with.
Well, that's right. We say roughly an hour a day, 5 hours a week, you can get this thing done. The truth is that basically 100% of people that come to us have a W-2 job full time, and they're somehow successful. It goes back to kind of your why, right? Because you have to shave off 5 hours per week. Where's that going to come from? What behaviors are you going to change to make room for that? And might it perhaps require a conversation with your spouse? Does the family maybe make some compromises so that you can actually spend time on the side building this up? And this is why the why is so important. This is why involving your family in this is really a family decision, is so critical. And so 5 hours a week is kind of the minimum. And what happens, or Jeremy's talking about, when you get to a live deal, things pick up a little bit, but you're excited, right? The adrenaline's pumping. It's like a house flip. It's like very exciting. You have this transaction going on, and then you close on it, and you're like, wipe the sweat off your forehead, and you stabilize a little bit, and then it gets kind of boring. Like you're like, oh, this is kind of boring. It's sending me a bunch of money. I have a nice 3% acquisition fee. You're like, huh, maybe I should do this again. And so what happens is, because of the law of the first deal, many people quit their job after that first deal because they get a nice pop on the acquisition fee. So for example, if your average deal is $4 million, like we talked about earlier, if you were to work with us, and you typically have a joint venture partner, one's the kind of deal finder, one's a capital raiser. So 3% is the acquisition fee. It's $120,000 split 2 ways. That's 60 grand a piece, right? So now you have $60,000 runway. Maybe you have another $60,000 in savings. Now you have a year runway. That's helpful. And then you probably, because of the law of the first deal, you have your second deal either under contract or it's about to go under contract. And so this gives people the confidence to quit their job literally within 6 to 12 months. It's staggering. And then, of course, once you put more time into it, it's going to become even more productive.
Yeah, and I think what's really interesting is when you get that first deal, you become a much broader target for the brokers because they know that you close deals. And you're going to see some things. That's when those off-market deals really start clicking and come to you that are neighboring or adjacent or within the same community. They look at it as an opportunity to get an easy transaction with you again.
That's right. Anonymous attendee is asking, do you suggest we host a webinar to invite investors for us to review sample deal with them? So the answer is, of course, yes. A lot of stuff is done virtually. In person is obviously better, but yeah, I mean, you come across someone at a conference and you go to a conference and you follow up with them, then by all means have a Zoom call with them. The point is this: you're still using the sample deal package as a conversation piece. You send it to them, you address their objections and their questions. And then you say, hey, if I find the deal substantially like this, how likely would you maybe invest $50,000, And in the beginning, it's a little, you're not very confident, maybe you're not talking to the right people. But all of a sudden someone goes, well, yeah, I would be. I'd have to see the real deal, but yeah, I would be. And you're like, no way. This guy's dumb enough to want to invest with me. Like, I mean, it's just a big confidence booster. And if you can do it one time, You can do it a second time and a third time. And now it becomes much more effortless. And this is really what I love about capital raising, because at the end of the day, you're solving a problem. Like I said earlier, you feel like you're begging people or you're manipulating people or selling people. No, it's not like that at all. You're solving a real problem. For the reasons we mentioned earlier, stock market investors got to deal with volatility. Today is one of those days, awful, right? So up and down, good Lord. They have to pay taxes on those capital gains, and that's not good. And there's very little cash flow unless you're investing in a small sliver of high dividend paying stocks. There's very little cash flow, and so you can solve all these problems with them, and I think it's really cool. So, well, cool. Well, it's great questions, y'all. Appreciate you staying up with you at the very end, and hopefully we provide some value for you. And again, don't leave this webinar by scheduling a call with us. We'd love to have a call with you and see how we can help you advance your real estate investing journey. themichaelblank.com/clarity. So really appreciate you all hanging out with here this evening, and we'll catch you next month on the next webinar. Good night, all.